G'day, my name's Tom Elliott. Welcome to another financial markets update for Hodges Real Estate. Well, in the last 24 hours, Chairman of the US Federal Reserve, Janet Yellen, has decided to leave American interest rates on hold. Ms. Yellen was quick to point out that they remained positive and upbeat about the US economy, but right now, probably because the US share market, in fact global share markets are a bit rocky, they are keeping American interest rates on hold. I do think, however, that the next move by the US Federal Reserve will be to lift American interest rates sometime in the next 2 to 3 months. Speaking of the share market, it's fair to say that the start of 2016 has not been particularly good for equity prices around the world. Fears have set into stock markets. Share prices have been hit pretty hard, though towards the end of January a few positive signs started to appear. The big fear in the world is twofold. One is that the Chinese economy is slowing, and that is undoubtedly correct. China's growth is probably headed towards 4 to 5% per annum, whereas only a few years ago it was almost 10% per annum. The second problem, and allied with lower Chinese growth, is weaker commodity prices. And we know all about that here in Australia because the weak iron ore price in particular has absolutely smashed the share prices of big miners, or not so big miners, like BHP and Rio. Good news for motorists, oil prices have hit multi-year lows, down to around $30 a barrel. Now this is partly due to the success of the US shale industry extracting oil and gas from shale deposits, and also because Saudi Arabia is trying to put the American drillers out of business by pumping as much crude as it can out of its reserves. Who knows how long this will last, but really the consumer is the winner. Petrol around Australia currently trading for just around $1 a litre. The reality is, of course, it would be a lot cheaper than that, except the Australian dollar has been pretty weak recently, still trading around just 70 US cents. The Reserve Bank here is on holiday in January. They next meet in February. I expect interest rates locally to stay on hold. And what about house prices in Melbourne? Figures just out suggest that over the past 12 months, the median price in Melbourne shot up 14.5%. A median house in our city now costs $720,000. It is astonishing. I don't think this year is going to be quite as positive as last year, but it's good news if you own a property, not so good news if you're a first home buyer trying to find one. In particular, suburbs like Box Hill and Glen Waverley still attracting a lot of interest from Chinese buyers. The only caution I note there, that if the Chinese government ever changes the rules about Chinese real estate buyers being allowed to take money out of the People's Republic, well, that wouldn't be good for our market. On that note, I'll end here, and of course, if you are thinking about buying or selling a property, either as an investment or as your principal place of residence, don't hesitate to contact your local Hodges office. Their assistance can only add value to the process. For more information, go to hodges.com.au. Thanks for your company, and we'll do it again next month.